Hello and welcome to the Wendell Effect. My name is Brandon Wendell, obviously, and I'll be here as your guide through my analysis of various financial markets. So welcome back, everybody, and if you're brand new, welcome to the program. Hopefully you enjoy it and come back. Anyway, just to remind you, we are not registered broker-dealers or investment advisors. We are going to take a look at the markets from an educational standpoint only. I'm not telling you to buy, sell, or hold any particular securities, and there's always risk involved in the markets. No matter what we do, we cannot eliminate risk, just try to manage that risk that we take. And we're not subject to trading restrictions, so we got a position in security or initiate one at any time. Also, if you want to stay in touch with me, you can catch me via email at brandon.wendell.cmt@gmail.com. You can also catch me on Twitter. That's probably one of the easiest ways to reach me, is direct message me there. And of course, you can find us on YouTube under the Wendell Effect. Don't forget to check out the Chart School videos as well. Those are evergreen videos talking about different techniques and things to look at in the markets. And they're absolutely free for you, free education. So make sure you check out the Wendell Effect Chart School in addition to these videos, the weekly kind of analysis videos. So for today, we're going to start off, obviously, for our weekly analysis, taking a look at the equity index futures, which we normally do. Then we're going to jump into the energy futures. I'll start taking a look at the sector analysis and find opportunities in different markets. And then we'll wrap it up with a search on the Indian markets to see where they might be going for the week. So, as we jump into September 18th for that week of trading coming up, we're going to go into the equity index futures. And starting off with the ES, we had a nice drop last week. As you can see, that big red candle after we failed to move higher. And that was all really kind of being blamed on what happened with the CPI numbers and the inflation numbers, and the possible fact that Jerome Powell is going to have to continue raising interest rates and the economy is not as strong as it was expected to be. So, honestly, when you look at the technicals, it was going to go down anyway. I don't think we've seen the bottom of the market yet. We can definitely not only test the June lows, but even break them. Historically, September and October are the worst performing months of the markets as a whole. So, going into the daily chart, we did have a pretty deep retracement. We retraced 61.8% of our last move down, but we are projecting downwards and just simply stalled at the 3,900 projection area. I think we got plenty of room to go because you can see momentum is very strong. We've got the RSI pointing downwards with lots of bearish momentum, telling us the prices are going to continue to slide. Now, it may take a little breather at the beginning of the week, but overall, I think we're going to continue to go down. So this bullish candle, wait to see if we break the high of last Friday's candle, then we'll get that little bit of a pullback. But again, it may just be a small correction. And let's see. I'm going to jump in here and take a look at the daily chart of the ES, since we were just looking at that on the bigger picture here. So on the December contract, basically looking to see where we might be headed, right? And what I had originally done was this overall move to the downside. I started projecting lower from that, and you can see where we stalled out. Markets are now open, and it looks like we're starting to continue to go a little down. And what I want to do here is a little bit of correlation and see from this little impulse to the downside, do we have overlap that might give us a little bit more of a hint as to where we're possibly going to go. So when I go into the settings, I'm going to change the color around a little bit so it contrasts with the initial, and there we go. You can see we're actually reacting kind of in between of these two, so our next target might actually be between those two as well, between 3730 and 3630. So it's a 100-point range, just kind of wide compared to the previous one, but possible targets down there. And we'll just have to watch and see as prices are moving down. Now, I also said they might be pulling back a little bit. And if they do, from this high, we put in retracement values to get an idea of where we might pull back to. We can see a 23.6 retracement would be 39.29. If we go a little deeper, 39.76, and then 40.14 for those possible retracements. So, going down to the 4-hour chart, you can see that we started to hook up a little bit at the end of the downward move on Friday. A little profit taking before the weekend, really. But if we do start with a move to the downside, we are going to pause a little bit here, as we've got a couple of 4-hour demand zones. And the origin of this move really is the lower one, the 37.41 to 37.90. That's going to be the stronger zone that I'd watch for a pretty decent bounce at that point. And again, if I go out to the live chart right now, take this down to the 4-hour, you can see that we are opening up and pretty flat. We're not going to get a whole lot of activity on a Sunday evening, but again, when Monday rolls around, Monday morning, look for that pullback and possibly shorting opportunities here at a little bit of this basing, and that is also right near the 38.2% retracement value. So that's what we might get before we start to move back to the downside. Looking at the comparison chart, you can see that our leader since we started moving down is the Nasdaq as usual. That's been one of the big leaders both to the upside and or to the downside. So looking at the Nasdaq, pretty much similar picture here. You can see that we weren't as strong on the move back up the 2 weeks ago, and then last week obviously we crushed it to the downside here on the Nasdaq. Didn't actually get below 40 on the RSI, so it doesn't look as bearish as the S&P did. That's kind of interesting. Going down to the daily chart, we even have a little bit of divergence suggesting a bounce coming. You see we made a lower low in price but a higher low on the indicator. When we're making lows, we should really be doing it with more momentum, not less. The fact that we had less momentum on that move tells me that we might get a pretty good sized bounce out of this. And again, looking at the smaller time frames here, the 4 hour, if we bounce up to 38% retracement on the Nasdaq, there happens to be a rally-based drop supply zone there between 12,200 to 12,268. So we can take a look at the live chart as well. And you can see that we've opened up and haven't really done much since the open. I didn't expect it to do much anyway. We had a slight gap down, but that's about it. So again, look for that retracement back up to the 12,203 early in the week, Monday or Tuesday, before you can start shorting again. So that's really all I'm looking for. On the Dow weekly, this looked pretty bearish. You can see we dropped down pretty quickly, but again, we couldn't get below 40 on the RSI like we did on the S&P. So we go down to the daily chart, and once again, we're making new lows on the indicator, on price, but we're failing to make lows on the indicator. So that's suspicious. And again, suggesting that prices are going to take a little bit of a bounce before they go lower. So putting in the Fibonacci retracements on the 4 hour time frame, I actually don't have them there, do I? But they were at 31,840 and 32,315 and 31,840. I was just trying to see. Oh, it wasn't on the most recent one. So actually, let me go out live and do this one again. YMZ 2022. And on this 4 hour chart, let me fix this a little bit. Basically, we've had an overall move down, and we can measure for the retracement to see where we might pull back to. And it's kind of in between zones right here where this kind of sideways movement in the initial thrust to the downside began. So we could probably go somewhere in the middle of that and start to see some stalling before we get lower. All right, so our next market is the Russell, our last market, and you can see the Russell, it struggles even making a new low, let alone getting the momentum to go down. So looking at this, yeah, we're probably going to still see some new lows this year, but we're going to be pretty much choppy and sideways, more so in the Russell. You can see it fought to get fresh lows, but it was struggling to do that. And again, we did close below 40. So underlying weakness is definitely there. And we're getting that same bounce we're getting in the other markets. So we go down to the 4 hour chart. There's actually a supply zone right at the first retracement point, right around 1820. So keep an eye out for that as the possible stalling. I'm not sure who's going to lead us to the upside. The Nasdaq was leading us down. Often it will turn around and lead to the upside as well. So if we see the Nasdaq is leading, or if the Russell's leading, that'll tell us when we're turning down. If the Russell leads and we hit supply, if that stalls and turns at supply, the other three equity indexes will also move down as well. So the way I look at that is this comparison chart that I use right here. And again, I was comparing the move to the downside and seeing who the leader was. As we bounce right now, I could take this down to a 4 hour time frame chart. And coming off those lows a little bit, you can see it's kind of a toss-up between the Russell and the Nasdaq, although the Russell seems to be holding a little bit better to the upside than the Nasdaq. So if that's the case where the Nasdaq or the Russell's the leader, when the Russell hits supply, that's when you expect everything to start diving. So we keep an eye on that. And this has been a very bearish index as well. So moving on to the energy market futures for the week of September 18th, we start off with crude oil, just kind of hanging out right in this weekly demand zone. But honestly, we keep sliding down in momentum. We should break through this zone. If it doesn't bounce very quickly, it's likely to keep going down. And I wouldn't be surprised to see if we reach 70 before the end of the year. So looking at the daily chart, you can see we did do a retracement about 50% of our last impulse, and therefore we're trying to move back down again. Notice we failed to get above 60 on the rallies. I pointed that out last week, I believe, and we did get below 40. So that's suggesting that this should go and make new lows this week. So looking at 80.02 is our first target for the week, and then if it gets really bearish, we could go as low as 73.73. On the 4-hour time frame, we had a negative divergence going on here towards the end of the week, and that started our move back down. As you can see, there's the negative divergence. So just keep an eye out for any positive divergences to cause a pause in that move down. But as of right now, well, we've got a little bit lower lows right there, same lows on the index, so that's why we're going sideways, but that's not enough to cause a big move up. It looks like we're going to continue to push down towards those demand zones. But if you end up seeing a divergence either on the daily or even the 4-hour time frame, look for a little bit of a bounce and then identify new opportunities to short if there's some sort of supply. You know, if I go out right now to, here we are, CLV 2022, and you see a little bit of a divergence there, but not much. Okay, so again, looking at this, you can see that we had a little divergence causing somewhat of a move back up, but not a very strong one yet. If we look at the last impulse here on the 4-hour time frame, we can possibly get an idea of where we're going to pull back to right now as we are retracing. So we got a little bit of an upside target here, 86.53 to 87.23, and yeah, so we'll see how far we pull back, but I imagine we're going to start turning down from one of those levels. Unfortunately, there's no real supply here to be able to trade on, so we have to wait for something to be formed. Looking at crude oil for the next month, crude oil is pretty much flat. As you can see, it's very choppy historically for the last 15 years. Hasn't really gone anywhere. So that's why I was saying I don't really expect much out of this trading opportunity, either up or down. So on nat gas, it looks like a giant double top formation possibly. We did make a higher high on the second peak on this weekly chart, but we did not have the momentum, and that's why you see us falling down the way we are right now. And I mentioned, I think it was a week ago, oh no, I didn't. This is brand new. I'm mentioning right now that we've broken the neckline on a head and shoulders formation. So if we don't get, I mean, this is just going to be a stalling area here at the 7.4 area. I did tweet this out on Friday, I believe, before I started for the weekend, or Saturday, I can't remember. But anyway, if we do make the measured move, it should take us down to the next demand at 5.704. I don't usually get in right on the breakouts. I usually wait for a retest of this neckline as kind of a resistance level, and then I take my entry. So you can see on the right shoulder, we did not get above 60, which is a very bearish sign and suggests that prices will collapse down to that demand. On the 4-hour time frame, we actually do have a little bit of origin of selling pressure right here at about 38.2 retracement. So on that impulse down, that retracement would be lining up right with the origin of selling pressure. That's a great retest and shorting opportunity area if we're looking at for the nat gas. So look for that opportunity to continue to join that overall bearish trend. And looking at nat gas historically, this is a bearish time. So it kind of plays right in line with everything, where you see normally the markets are moving to the downside 80% of the time for the next month. So it's not really that much of a surprise to see this kind of selling pressure coming in right now. And actually that goes all the way to November 12th. So we're entering a very bearish time of the year for nat gas altogether. Okay, so with the weekly chart of gasoline now, you see that we actually punctured this area of demand. We kind of held up there, but the bearish momentum is so strong that we're actually going to be able to push through that. You can see on our last week we had that big topping tail, which is basically telling us we're going to rocket through down to the next area of demand. I mean, obviously that'd be great for us at the pump. Looking at the daily time frame here, oops, sorry about that, my phone is on vibrate. And basically looking at the daily time frame, you can see we've had a little bit of a pop to the upside, got a little bit more demand to get through on the daily chart, but really not much, honestly. I think I would love to be able to sell at the supply, but I don't think we're going to get there. That's the thing. So I think we're just going to continue to push lower coming into this week. And I'm looking for that target of that, what did I say before, about 2.04. So look for this to drop quite a bit. Just got to find the right entry point. And looking at the, that was the daily chart. Looking at the 4-hour, this was the opportunity right there on the 4-hour time frame. We hit a nice area of supply on Friday. So, like I said, I don't really expect a whole lot of demand to hold us up, but we'll just have to look for new supply zones to form for a possible entry in the trade. Looking at the historical pattern here for the last 15 years, there's actually been a bearish bias. You see it's only 40% to the upside over the last 15 years. So overall, the market usually drops pretty well. Average return, look at that, about 10.5% to the downside. So we're entering into a very bearish time of the year for gasoline, and the chart is supporting that. Again, we could move very easily down to the 2.04. Heating oil doing an interesting little double top formation here on the weekly chart. You see we made a lower high with a lot less momentum, and we're getting ready to break that neckline down. If we make the measure move, 2.2749 is the target. Looking at the daily chart, I would expect a little retracement as we're retesting a little bit of demand here. You see we have drop-based rally, so we might be able to pop just a little bit. And if we retrace to about 38.2%, which is 3.3589, I would look for a shorting opportunity there. Might get a little pause here at 305, but overall we should be able to make that measure move. Looking at the 4-hour chart, as a matter of fact, I think this was the same area, 335. Yep. You can see there's a 4-hour supply zone right in that 3.35 area that I was talking about. So look for that 4-hour supply as a possible entry with your stop above and targeting that demand, what do I have it at, or the measured move at 2.27. So we're looking at selling about 3.35 area, that area when it hits the zone. Technically 3.36 is the actual entry for the supply. Alright, so moving along here from heating oil, we can start in the stock market now and take a look at the overall sector and rotation of the sectors. Looking at what happened over the last 6 months, you can still see, I have it compared to the S&P just to kind of highlight it because all the sectors are down when you take out the S&P. But you see it's been a flight to safety, as expected in a bear market. And we definitely are in a bear market. So it looks like it's going to continue. This is the way it looks on a weekly chart where you take out the S&P. Again, there's still a flight to safety. Those safety sectors are performing better than the aggressive sectors, if you will. So, looking at the map of the market for the past week, all bloody red, except, again, for some of the safety and healthcare, and a little bit in the restaurants. Apparently Starbucks, everybody needs their coffee no matter what, and a little bit of oil and gas exploration. So as far as the sector ETFs go for opportunities, taking a look at the XLY, which is consumer discretionary, that you would expect to be dropping, and it does look like it's continuing to drop. We had a retracement of about 61.8% Fibonacci retracement, and are actually continuing to push down right now, possibly getting ready to hit our first target at 145.28, but it's kind of choppy, so it's a little difficult to actually enter anything here. So I'll look for better opportunities. We did have Booking.com as a possible trade opportunity we were looking at last week, and unfortunately the stop might have been a little too tight. As you can see, it was right up against the zone. This week, as we come in, it actually is working, but it was very close to getting stopped out, probably made you a little nervous. So hopefully you're able to take advantage of Booking.com, and it is about halfway to the target, so you might be able to move your stops to break even. And I think with the bearishness I'm expecting this week in the markets, we should be able to reach our targets pretty easily. McDonald's was another one, and looking at McDonald's, was expecting a bit of a move to the downside here. This was the chart last week as we looked at the trade opportunity, and it is also almost near our first target, as you can see. So working out very, very well. It is pulling back a little bit before it hits that target, but fear not, it looks like we should be able to reach both target 1 and target 2 at 244.87. XLC, the communication sector, broke to the downside after it had been choppy for a little bit here, and we just reached target number 1 of the 100% projection. Actually, technically it's target 2. 61.8 would have been number 1, but anyway, we have a positive divergence, so I'd expect a little bit of a bounce in communication for this week. So if you got stocks in the communication sector that you're looking at for a short-term buy opportunity, it's not long-term. Again, this is a bearish sector, but there might be a small pullback first that you can play, maybe some short-term intraday longs or even a couple-day short swing longs, and then ultimately look for new supply to be able to short. On the XLK technology sector, this is also doing a little bit of a divergence, so I'm expecting a pullback. You can see we got a little drop, little base, and then drop right here, right around the 131.69 area to 133.17. So I'm expecting a pullback and then maybe a new selling opportunity when we get there. and the technology sector should probably drop with that as well. So we'll see what happens. The industrials, that actually broke demand. Not only did it break it, but it gapped beyond that demand zone. It was actually a second test. You see we popped in there, bounced, then went down again and just shattered that zone with a big move where it took the momentum way below 40. So bearish momentum is very strong here. If we get any kind of a bounce, it'll be very small. And I expect the XLI industrials to continue its move down to 83.92, that next Fibonacci extension. So inside that sector, one of the things we were looking at as an opportunity was Cintas. And as you can see, Cintas did a little bit, well, I think it just missed the entry and it bounced. But with that sector being very bearish, if you're not already out on Cintas, you probably want to be, because we're probably going to go a bit sideways and you're starting to see selling pressure coming in. And remember, the sector itself is ready to die off. So it might need to take some profits. Oh, actually, you know what? Look at that. I was right. I forgot that was last week's chart. This week's chart did just do that, and I think I gave that warning last week. You see the negative divergence. So even though we're doing a little bit of a bounce now, it doesn't look like we're getting much out of that. So I was right. It actually did drop. So hopefully, I think I gave that information last week. Forgot to label that. Sorry. Anyway, building materials, XLB is almost down to its first target as well, or technically second target. We had a little bounce, as you can see right there, at the 61.8 retracement or extension, and it looks now like we're going to get to the 100% extension, and we might get a little bounce, but again, not much out of that before we continue to go lower. The only thing that tells me we might not drop very quickly in materials is that we don't have as much momentum as we had before. You can see the momentum is a little bit less than the bearish momentum we had on the previous low. Not a good sign if you're trying to continue trend. So we may just go sideways for a week. Either way, this is not a sector I really want to play this week. On the energy sector, we've been waiting for a breakdown. We might be having it soon. You can see we made a couple tops that we could not get above 60, and that was right below that supply that had been tested, and that led us to a breakdown of the trend line. So now we've broken that trend line, we might actually start to see more of a drop down on the energy sector as we start to see a little softening of the inflation that's been hitting us. It all really kind of depends on the actions of the Fed and the economy as well, but technically what I'm seeing is that the markets here are getting ready to drop down a little more. So keep an eye out for a retest. I'm not convinced this is the break that we need yet. It might go down a little more and then retest. I want to short the retest, so I'm not quite ready to get in yet. However, there are some individual stocks. You can see Valero was a trade idea, and because of that break, you can see how we broke through the demand zones. Last week, I'd already saw that it was breaking through the first area of demand. It wasn't going to work out. And then the second one, there was no entry on the long. Hopefully, you didn't take the long, because anytime the RSI is below 40 when you're coming into a demand zone, that tells you demand will not stand. It's kind of a filter that I use. So if the RSI is below 40 when I'm looking to buy, I just don't, because there's too much bearish momentum. And you can see that that's what happened here. We had that price coming into demand, and we went below 40 on the RSI, so no long, and you would have been stopped out had you taken it. On the opposite side, the 60 is where you got too much bullish momentum to take a short. So we'll see that in some of the other opportunities. Moving on to consumer staples, we have a positive divergence just shy of our demand zone. So we're coming into this area of leftover buying pressure and positive divergence. We don't have as much bearish momentum. We should get a bounce here. And I don't think I put in, let me see on the XLP. I'm on the 4-hour chart right now. I want to go back to the daily for a moment, draw in the retracement from the high to the low right there, and now go back to the 4-hour. And nope, there's no supply anywhere there, or even 60-minute. 60-minute, there's a little something there, but it's not at a retracement level. So we'll have to see if some of these retracement levels, just watch for those, 71.75, 72.28, or we could end up using this area at 72.83 to 73.04 as supply. It's really good too, with lots of selling pressure. That'd be a great shorting opportunity if you can get it. You know, and we may just stall out at one of the fib retracements, but if we do go to this supply, I would love to be able to short there. And as far as the target goes, let's see. I guess we have the demand, the daily demand that I'm looking at, 70.57. So I'm going to look for a possible trade opportunity here. Again, The trade is, now I don't know if we're going to retrace this deep, but if we can, that's where I'm getting in. Selling at supply of 72.83 with the stop loss just above. Go ahead and fix this. Oops, actually. There it is as a stop loss. Now, coordinates. Right about there. 73.16. And like I said, the target is right there before you hit 70.57. I always want to get out before we hit that demand zone. So, put that in as target number 1. There you go. All right. So, moving along here. Oops, what happened? There it is. On the Constellation Brands, this was a trade opportunity I was looking at from August with a high probability for longs. And you can see that it hadn't come back down to the demand here yet. And I think we actually finally did get in early September. So where are we right now? Let's take a look. Unfortunately, it turned around on us, and that's a loser. That's just the way it goes. Sometimes everything lines up, it looks like it's going to be good, and the markets just take a dive. So unfortunately, that's what happened. So that one is a loser. We've got a bunch of winners. One loser is going to happen from time to time. XLV, the healthcare sector, also looking a little bit weak as we pulled back. We can't seem to get any momentum in either direction. You know, we're not going above 60. We're not going below 40. This looks like we might go a little bit choppy and sideways for the week. So I might want to stay away from the healthcare sector. There were some individual trade ideas I was watching. PKI on the 60-minute chart was a buy opportunity. We were looking at 137, targeting that 145. Well, unfortunately, you can see it gapped down, and then it crashed down. Again, if you see the RSI is below 40 when you're looking to buy, don't, because you're likely to see the prices continue to move down. So that can really save you on a lot of trades that would have cost you money had you entered them. XLU is making a double top formation with a nice negative divergence, and we're getting ready to break the neckline right now. So there might be an opportunity at the 73.98 neckline for a short. We do have a demand at 70.97 to watch, but ultimately the target should be closer to that 69.43 demand, the lower zone. But there is a pretty good gap and move to the upside here, so I wouldn't count out 71 as a possible first target. But again, I'll wait for a move below the neckline, wait for a retest of that from below. Dominion Energy was another trade I was looking at buying a shorting opportunity we were looking at. Going back a little bit here, waiting for it to rally up to 82.15. And let's see. This is a new one for the week. So this is a new trade looking at a possible drop-based drop opportunity on Dominion. Let me just make sure. Yep, I believe that's right. On Dominion. Yes, it is. As you can see, moving down. Unfortunately, we're not moving up into our supply, but hopefully we will soon. This is on the 4-hour time frame. Just wait for that pullback to 82.15. Stop loss 83.46. Target 1, 79.59. Target 2, 76.76. Looking at the financials, also extending to the downside, the fact that our last peak could not get above 60 is extremely bearish. So I do expect this to continue its move down. It might be a little slow, but ultimately we should get to 31.33. Maybe not this week, but ultimately maybe the next 2 weeks it'll get down there. But I would expect a little bit of choppiness and overall bearish movement out of this ETF. State Street was a short opportunity. This is, I think, last week, yes. So looking back at last week, got a short opportunity on State Street coming into an area of supply, and it worked. Unfortunately, the stop was a little tight, so you might have been stopped out. If you waited for confirmation on the entry as it left the zone rather than getting in as it hit the zone, then you were fine, because you would have entered on this red candle as it was leaving, and you've already hit target 1. So great opportunity there. But again, you need to do a confirmation entry on that rather than just a limit entry as soon as it hit the zone. Looking at real estate, XLRE, you can see that we had a head and shoulders formation. There's the move down and a retest. It went a little further than most retests do, but hit or measure move, the downside move. Now we have a positive divergence, so we should get a bounce out of this. And looking at XLRE, let's see where we might retrace to. Go out to that daily time frame. There's the measure move. Let's clean up this chart. Because again, the measure move's already done. We don't need that anymore. So if we look at the fib retracement from the highs, And drop down to the 4-hour time frame. We do actually have drop-based drop at 38.2% retracement. There you go. So there might be an opportunity right there. Now I could mark this off using the whole body to make sure that we get in. Or if you want to reduce the risk, you get at the 41.24, the smaller area. Place the stop above 41.34. So if you're looking for an actual stop loss area. So looking at the stop loss here, we'll go ahead and set this up. There we go. Yeah, we'd probably do 41.45, but that'd be pretty good. So that's the, oops, I didn't do that right. Stop loss, there we are. Oh, that's weird, it didn't go right. Ah, it just happened. Anyway, I'm not going to worry about it. Try one more time. Template, stop loss. I must have changed my template by mistake. Anyway, so our move to the downside should be starting again from that 40.96 area, so look for that. And we can do some follow-up from last week's trades. KMX was a trade opportunity, I guess, that we were looking at. And on KMX, what happened here? I don't have any follow-through? I thought I did. Well, we can take a look at that real quick then. KMX. And hang on, it's just taking a moment to load for some reason. Unfortunately, I can't show it right now, but anyway, CarMax did pull back up a little bit, missed the entry, and has already hit target number 1 for the second time. So unfortunately, this trade is not going to come into play anymore. Just got to abandon it, move on. Speaking of moving on, AMAT had an entry that was triggering at supply, and we were looking for this retracement back up into the 9651, I think it was. And now as we follow through with this, you can see that it did actually go all the way down to target 1. So hopefully you're able to take your profits already on that trade. And we're going to be looking for it to move down to target 2 pretty soon. So make sure you got a trailing stop adjusting downwards with you as the winner is getting a little bit bigger. We also have Fidelity National Information Services, which was a short opportunity looking at there. And let's see, on the follow through, you can see that it actually worked out, but it did poke a little bit above possibly on this on the stop loss. So depending on where you place your stop, if you were able to capture this, it did actually hit both target 1 and target 2 to the downside. Worked out pretty well there. TAP Molson, another one we were waiting for to rally up last week, and it did, and moved down almost to target 1 right now. So make sure you moved your stops down to at least break even. If not, probably put it just right here at about 51.50. That way you've got it above this little bump as it's moving down. You should be okay on that trail stop to get you down to the first target there at 49.26. So those trades are working out pretty well. And TSN, Tyson Foods, was another trade we're waiting for a pullback to get us in for a short. Tyson Food unfortunately missed the entry by just a few pennies and already slammed down to the first target. So if you weren't able to get in, don't chase price, just let it go. And that is it for that market. We're going to go ahead and move over to India, and looking for the week of September 18th in India. As far as last week's performance, it was kind of bearish, a little bit mixed. I mean, you see that the big players, Reliance and even some of the technology services, Etfs, TCS, they were all pretty red and holding the markets down. So looking at the Nifty for the next week from the 18th of September, overall, it only goes up 30% of the time. Typically, this is a very bearish week for the Nifty. 70% of the time, we are moving downwards rather than up. So expect some selling pressure possibly to come in. That's the last 10-year history. Looking at the Nifty, you can see we tried to break out of our downtrend twice, and now on the second peak, we actually have a negative divergence, which is suggesting the price is going to drop pretty quickly here. So keep an eye out for that. On the daily, we've already retraced from our high 61.8%. So with that deep of a retracement, just keep an eye out. If we start to bounce, great, we might be able to push up a little bit. But again, we had that big divergence. And if we do continue down and we go below 40 on the RSI, then we'll probably break this low and head down to the demand at 16,653. So just kind of keep an eye on that on the daily chart if we break the lows. And again, we need the RSI to go below 40 to target that demand down below. If it doesn't, where we start to see some bullish pressure come in, we could actually rally. I don't see us making new highs this week on the Nifty, though. Overall, the markets look a little weak. If anything, it's going to, if we do hold above 40 on the RSI on the daily chart, expect prices to move sideways. Down on the 4-hour chart, nothing different here, although on the 4-hour you can see when we made that low on Friday, we actually did go below 40 on the RSI. So that's suggesting if we bounce, it's going to be a small bounce, and we're more likely to move down than up. So we do have another target here, 16,947. Let's see what it was before. Yeah, 653. So this is a little bit higher of a target on the 4-hour rather than all the way down. So expect a bit of a pause there. We may get a little bounce, but again, not much of a bounce out of this before prices go lower for the week. Looking at Reliance on the daily chart, a couple weeks ago I was looking at this little head and shoulders formation that was going on. We broke the neckline. Well, actually, no, I'm sorry, this is current right now. We have broken the neckline. Watch for a retracement and a retest of the neckline around, what is that, 25.30? And if we can bounce off that neckline, it might be a nice shorting opportunity, at least down to the 24.57. So maybe put your stop at 1 ATR above and ride that down. That'll obviously drag down the Nifty as well. TCS was one of the bearish securities. Last week you saw we were at an area of supply, and I said look for the selling opportunity from the supply down towards demand. Well, this week we see we made it. Not only did we make it, but we really just got there quickly. I mean, the first couple days of the week didn't do much, but then from Wednesday morning when we gapped down, we just slammed into that demand. And we got plenty of bearish momentum to continue pushing down on TCS, possibly down to that 29.22 first target on the projections. So I would not be surprised. Might get a little bounce, but other than that, it's likely to keep going down. ICICI Bank. The bank sector was a little bit stronger than the other markets, but as we're moving up, we got a little retracement going on right now. We might have a little more to go to the 38% retracement at 902.40. And then we should continue to go up as the banking sector has been strong. It's been really the best sector in the markets there. What do we have? Bajaj Financial Services Limited. Unfortunately, I was waiting for this to come down to a demand zone to get in for a long. It didn't. It moved up instead of down. So we ended up touching the targets. We might get a bounce off this area. It's not really good demand. And you have drop, base, rally, but no follow through and selling pressure. So I wouldn't want to take a long here, but I do believe that if we break the high of Friday's candle, or this is a 4-hour, the end of Friday, then we should continue to go a bit higher. I don't think we're going to get all the way up to 1894 though. It doesn't look like we're strong enough to move there. So it could just be a little choppy and sideways for the week. On the bank Nifty, you can see we came to the next target and saw a lot of selling pressure for the week. So we couldn't hold the highs. We did try to break to a new high, as you can see, and failed to close up there. There's still lots of bullish pressure, but you got to wonder what's going to happen. If we can break the low of last week, we should drop pretty dramatically, at least down to the 38,000 level. So looking at the daily chart, you see there's weakness already coming in where we did move down and gap down on Friday. A little bit of indecision after the gap down. That's why I don't think we're going to move down quickly. It'll be kind of stair-stepping and very choppy as we go down and a little bit sideways this week. Even on the 4-hour chart, I was actually looking for a pullback for a buy, so we still have to wait for it to drop down before we can get long anyway. And not really at a good spot, but there is buying pressure starting to come in already. Unfortunately, we may not reach the entry. We may just end up blasting upwards from this area, but it's not very strong, so it'll be more of just a little bit of a sideways and stair-stepping upwards. Anyway, that's what I got for you this week. Again, I'd love to hear from you, so make sure you give me feedback either in the comments below. Please hit like and pass along the word to your friends if you enjoy the analysis going on here. Love to share this with more and more people, and make sure you hit subscribe as well. Until next week, trade safe, trade well, and take care, everyone.